So here at UK Moneyman, we offer a free review service for your protection needs. What tends to happen is customers take out a policy possibly when they buy a house, but don't always review it when they have changes in their life circumstances, such as if they move house, remortgage, start a family, etc., etc. And the chances are that the cover that you took out when you bought your first property might not be suitable for your needs now. So what we do is review the cover that you've got, recommend any changes, or tell you that you've got the right thing in place all along, and then we can find a provider for you, shop around online, and get you the cheapest price for the cover that we recommend. Most customers, when they buy a house for the first time, take out life insurance. It's quite inexpensive to do, but it's inexpensive for a reason. So you'll normally take out life cover which ceases at the end of your mortgage term. So let's say your mortgage finishes when you're age 60, your cover finishes when you're age 60 as well. The good news is most of us live now, average life expectancy in the UK is 80. So the chances are that you're going to take out this cover, survive the term, and it'll never have to pay out. And the price of life insurance is reflected in that. And that's why it's relatively inexpensive to do, because chances are, touch wood, you'll never have to claim on it. Critical illness cover is a bit like life insurance. The difference is life insurance pays out if you were to die, and critical illness only pays out if you have a specific illness and survive that illness. Okay, so typically things like cancer, heart attack and stroke. So these are the kind of diseases that used to kill us in the 60s, 70s and 80s, but with the advances in medical science, we survive those type of horrible illnesses much more than we did back in those days. There's a far more chance that you will survive these illnesses than die from them. That's obviously good news, but that's reflected in the price of critical illness cover. So it tends to be much more expensive than life insurance, because the chances of you making a claim are far higher. So the risk is higher, and therefore in turn the premium is higher too. Different insurance companies cover different illnesses, so it's important that you get some good advice on this. Don't just take the cheapest policy on the market, because it's important that the policy doesn't decline just because you've had the wrong type of heart attack or cancer. It's only as good as the definition when you come to make a claim. Unlike critical illness cover, income protection pays out no matter what it is that's keeping you off work. So any illness, any injury, if your doctor signs you off, then you should be able to make your claim. In terms of the cost, yes, it can be expensive, but the good news with income protection is it's quite flexible. So you can decide how long you're prepared to wait before you make your claim. So the longer you wait, the cheaper the premium's going to be, because that just reduces the risk to the insurance company. If you wanted that policy to pay out on day one of you being off, then they'd have to pay out for every time you had a cough and a cold keeping you off work. If you choose a more realistic waiting period, like 3 months, 6 months, the insurance company would be less likely to have to pay out, because hopefully they'll have gone back to work and they don't have to make a claim, and they reflect that in the price. The other way you can keep the cost of your income protection down if the budget is kind of running away from you that little bit, is you can dictate how much cover you want in the event of being off. So it might be just enough to pay your mortgage, just enough to pay your mortgage and bills, or up to maybe 50% of your net take-home pay as a maximum. And there's one other way that you can keep your premiums down as well. Really, on income protection is designed to pay out all the way through to retirement. So if you're off work due to you've done your back, or you're off with a mental health issue and you don't go back to work, you get that monthly benefit all the way through until retirement. But if the cost of that is prohibitive, then you can take out a 2-year policy. That's called a budget plan, where it just buys that little bit of time. So you've got that income coming in for 2 years, but at the end of that 2 years, then you're relying back on state benefits. So some cover is better than none in these situations, I always think. You can combine life insurance, critical illness and income protection into one what we call menu plan. And the providers do give you a discount each time you add a benefit in, and that can be a really cost-effective way of taking out cover. Thanks for watching the video. We do rely on user-generated content, so please subscribe if you found the information useful, and send me a question in the comments below, or drop me an email and I'll do my best to answer it.